please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Get in some fundamental opinion then. We have Mehraboon Irani of Gini Gem Consultants who joins in now to discuss what his view on the markets is. Mehraboon, hi, thank you very much for taking the time out. Well, there are some beneficiaries in the market with the rupee depreciation. All is not lost for pharma and IT companies especially. So within that basket of sectors, which ones would you be bullish on?
Well, I honestly have not liked pharma sector for at least the last 3-4 years, especially Indian pharma companies. And whenever I've been asked to comment or recommend something, I mentioned only two stocks, both MNCs. One is Abbott and one is Merck. But coming back to the Indian pharma companies, do they stand to gain from this? Answer is yes. Is there a trading opportunity? And my answer always was yes. But somewhere fundamentally the story called pharma is something which is not impressing me or making me possibly advise my clients to buy Indian pharma from a longer term. So while there could be some more steam as far as the trade goes on the long side, I honestly am not too enthused, and I don't think the dollar strength or the rupee weakness is reason enough for somebody to take a call from the longer term as far as Indian pharma company goes. So I still stick to Abbott and Merck. As far as Indian IT goes, I think I feel that most of the positives for the time being could have been played out. If somebody believes in investment, and when I say investment is from a longer term angle, more than a year angle, I would say that a stock like a Wipro at 320, 325 and maybe an SCL Technologies provides a good investment opportunity. Other stocks which I have liked, which I have recommended in the past, like First Source, Take Solutions, all have had the run up. I still like them. Frontlines, I still like a TCS. But somewhere something tells me that maybe next 3-6 months later, it's possible, especially the frontline IT stocks which have run up a little bit because of the rupee weakness also contributing to it. I think there may not be too much to make money as far as Indian IT frontline stocks go. I'm including them also, at least in the shorter term. But as far as story goes between pharma and IT, fundamentally, I definitely prefer IT by a distance as compared to Indian pharma.
Mehraboon, hi, morning. Anything specific with Wipro or just the fact that it's fallen quite a bit? I mean, it is the worst of the lot in terms of performance.
I would say yes. You said it. That's definitely a contributor. But somewhere I personally feel the stock has become absolutely under-owned. Not many have spoken about it. And somewhere you feel that there is a signal that things could possibly change and things may start getting discounted in the price. This is definitely not a call from the next 1 to 3 quarters angle, but for a call from a little longer term angle, because at this price, I don't think there is any possible room for a further maybe 5-10% downside. I don't see that, Prashant.
Okay. Mehraboon, what's your thought on Axis Bank and the management change?
I would say it continues to remain a very high beta stock in the banking pack, and management change definitely has been welcomed by the market initially, and then the fizz virtually got lost in the second half of the session yesterday. I think this is definitely positive from the longer term angle for Axis Bank. It will soothe a lot of nerves, but as a stock in a market in which I feel the whole lot of negatives which we keep discussing on, whether it's bond yields, whether it's US dollar right now, whether it's oil price, whether it's US-China trade war, I personally believe this is yet to play itself out in the overall valuations in the market. So Axis Bank, considering it's a high beta stock, at the moment, honestly, I would not be encouraged, I would not advise my investors or even short-term traders to possibly buy into it, because I still believe there is too much of noise in the market. State elections are yet to create some more noise. And the animal called the bull is somewhere getting scared right now. So I don't think the overall market is going to go up in a hurry, and Axis Bank being a high beta stock, at this moment, I would not be enthused to recommend it or advise my investors.
Mehraboon, so what are your thoughts broadly on participation in the market, etc.? We saw the mutual fund numbers. Paints a pretty poor picture in that sense, right? I mean, under 6,000 crores came in. We don't have the SIP breakup, that also would have gone down. Is that going to create some trouble? Because it's not as if foreigners have been big buyers, right? And it's not expected that they're going to suddenly turn around and start to buy big time. If the flow here also starts to taper a little bit, and I'm not even talking about it turning minus or big redemptions or anything, at least not yet. But what are the chances that that also starts?
It's strictly possible, at least in the near term. I think the market is right now seeing for the next 3-6 months, and the events in front of the market are not very positive. There are concerns, the concerns are for real. And therefore, I said somewhere these concerns will get discounted, will play itself out, and it could be maybe 11,000, 11,100 on the Nifty, who knows, that is possible. But is this the top of a bull market that we have seen? My answer is a clear-cut no. I believe that the animal called the bull is right now feeling a little bit low. There is too much of noise. He's feeling scared, and we could see the markets coming down. Don't forget, a bull market means economic expansion, and the economic expansion to play itself out is a period of 5-10 years. It's not something which would have started in 2014. It's not going to end pretty soon. So I would say this negatives with the market is seen, the noise which is there, the noise which could continue with the state elections, and then what is going to happen next year could play itself out, and we could see a market right now where one should be selling on any advance and possibly waiting for a real low price to buy into the market. But I personally believe that the bull will come with more ferocity a little later when these events play themselves out, because there are some positives on the horizon which I think the market will take its own time to possibly realize. Like, for example, the tax collections is one. Second is the corporate performance is another. Now, these two positives, along with the credit offtake picking up, the investment demand is picking up. Now, all these are clear-cut signs that we are still in a bull market. And let's understand one thing, a bull market which lasts for 5 to 10 years has got distinct periods of correction in terms of time, in terms of value, and the interim period, the weaker bulls exit, the weaker bulls only see the negative factors, and the stronger bulls come in.
Sure.
So this is the period which we are going through, where even the portfolios could start bleeding in the interim period. But at the end of it all, I still believe an opportune time will come for the market to ultimately pick up and attract buyers in the market. And that period could be maybe 2-3 months ago. And the two big triggers which I see, one is if we have a clear-cut signal that politically, I think India will have a same government coming next year, that is India specific. And second is somewhere I feel the US Fed. If there is an indication coming, which I personally believe, and that's my perception over the next 2-3 months, that US growth is ultimately going to slow down, and we are not going to see as many rate hikes as what we expect at the moment coming in 2019. I think that will be a clear-cut trigger for the dollar to reverse, and definitely a biggest positive for markets like India.